the perfect day to do this video because the big news came today, as you probably know, that the Bank of Canada cut interest rates. And in this video, I am going to talk to you what happened last month and what will probably happen this next month, and give you a little bit of an idea of probably what will happen towards the end of the year. So if you're sitting right now trying to make some decisions as to what to do, whether you're wanting to sell a property, buy a property, or both, or maybe you're just curious about what's going on, I think you're going to find this video helpful. So looking at the screen, you'll see these are just some of the interesting news that I'm seeing on Microsoft Bing, which comes up in my feed. Everybody's got a different feed nowadays, but I just thought it was always interesting, these headlines. You know, Vancouver home sales fall 17% in August despite the interest rate cuts. There was another one that came out here. Yeah, Calgary home sales declined nearly 20% in August from last year. And, you know, they give you bits and pieces of the picture, but they don't necessarily give you the whole picture. And that's really what this video is for, is to look at some of the hard data so that you can get a better understanding of what really is happening and what will most likely happen. You know, I've been on YouTube constantly in the last month, and I find it very interesting as I read and watch these videos and podcasts of so many people are trying to predict what the market is going to do, especially in the US. And it's incredible how many people right now are predicting a market crash, and you know, they think there's going to be a stock market crash. And I always find that interesting because if I was to get on this video right now and predict a crash, it'd probably really get your attention. If I was to say, hey, you know what, the real estate market in Calgary is going to be great for the next 5 years, it wouldn't get nearly as much attention. People really buy into negative news so easily and don't accept positive news. And because if you give it to them, they often think, well, yeah, maybe, but you know, I still think there's something around the corner. Now, the reality is there isn't anyone that knows for certain. After 25 years of doing this, nobody can predict with 100% certain what any market will do. So I look very, very carefully at what the market is telling us with data, and that's the best way of being able to make decisions. Because if you're basing all of your decisions on simply what you think the market, I can tell you 9 out of 10 times people end up being wrong. I've seen it happen over and over again. I've seen people delay their purchase thinking they're going to get a better deal if they wait, and they didn't. I've seen people that you know, thought maybe I'll just hold off on selling because the market's going to go up next year, and then it didn't. So I've seen this. Like I said, timing is really hard to predict. We know that we've had a really strong market so far this year. We know that we had a strong market last year in Calgary. The market is still good, but these markets do start to run out of steam. You can't ever see a market climb in leaps and bounds. And I'll tell you why. It's really simple. There comes a point where the buyers just don't have the capacity to keep up to a market like that. So it eventually runs out of steam, because there's a point where, especially the first time buyers, you only can push them so far. And think about it for a minute. If the first time buyers don't come into the market, how does it move up the food chain, so to speak, to sell all the properties? Because when the buyers come in and buy, you know, that starter home that they buy helps the person with the starter home to buy their next home, and up the food chain it goes. So you have to understand what keeps our real estate market alive and healthy are first-time buyers coming into the market. It pushes everything upwards. So you have to think about that. And when the market moves up so fast and add interest rates going higher as well, which we had seen, then of course it pushes the buyers. Now, good news is, you know, the data is showing us that it's time for the government to revisit again what the economy looks like. Depending on who you talk to, you're going to get answers on why these interest rates are coming down. I've heard all kinds of different analysts trying to tell me, well, you know, the inflation's down, so it's time to lower the interest rates. I've also had people say, yeah, they're going to lower them, but then immediately inflation's going to rear its ugly head again, and they're going to go right back up. So, you know, I've heard a lot of those videos. But the bottom line is, you know, right at this very moment, this is a good thing. We're seeing lower interest rates, and we're also seeing the market in Calgary especially starting to take, well, I'll say normalize just a little bit more. So let's get into some of the data. So if you look right here, August 24, we sold 2,186 homes. And it's interesting because, yes, that's 19.51% lower than August of 23, which is 2,716 homes. But let me tell you something, 2,716 homes is not a normal month of August for Calgary. This is actually more normal. If I was to show you data going back for the last 20 years, 2,186 properties is actually a pretty normal market. So when you see reports of it's down 20% in sales, that's a true statement, but compared to what? Well, yeah, I mean, we're just getting back to more of what we would call a normal market. So I personally am happy to see this, and I'll tell you why. It's better to have markets that are what I would call fairly even. You know, every seller, when they sell, wants to get a decent price for their property, but you know, most people who are selling are buying another property again. There are exceptions to the rule where some people are moving out of Calgary, maybe into a smaller market, and to them it would just be wonderful if the market was gangbusters and I'm moving out of Calgary and I'm going to some small town in BC or some small town in Alberta. Great, you're doing well. But for most people, you're buying and selling in the same market. So having a more even market actually makes sense. So it's healthy to have the market maybe slightly going up a little bit so that, you know, you're selling at a good price, but you're not in a position where you're buying into a very low inventory market where it's really hard to buy. So it's great to see, to me, the fact that new listings are up, you know, 13%. If you look at 3,536 listings compared to a year ago, 3,129, that's getting a little more healthy. You know, 4,487 total listings. That's not even a normal market for Calgary. We're still actually low on inventory. For a city our size, we should be at about 7,000 to 8,000 listings. That's more of what we would call a normal market. So we're still below normal, but it's sure good to see we're going in the right direction, to see 37% more listings year over year, giving buyers an opportunity to have a little bit more choice to see what's out there. You don't have to necessarily, in most cases now, make a decision the moment you walk into a property. You actually have time to maybe go home and think about it for a couple of hours or maybe into the next day before you pull the trigger and make a decision. So this is all good news. Now, our benchmark price, if you look year over year, this is including condominium. We're at 601,800, you know, so that's up from 566,000. So there was a 6.33% increase year over year. That is a abnormal amount of increase. I personally probably speak for most people in the industry. If that was sitting at about 2.5%, that would be pretty healthy. That's still above normal. Median price, well, I don't really love looking at median prices because it's not an accurate depiction of the market, because benchmark price takes into what we would consider to be a normal property, but median takes the amount of properties that sold above the average and below the average. So it's not a perfect way of looking at the numbers, but it's still some data points to consider. But 556,000, and that tells us that going up from 487 to 556, we saw a lot of properties in the luxury market sell, and that's why that number has come up. And same with average price getting up to 609. You know, up 16% because we saw a lot of expensive homes sell in this market. Now, over here, you can see our year to date. You can see at 2024, we're 19,704. So we're still only down 0.21% year to date on the amount of sales. So you see this, when you see that headline down 20%, you know, for someone that doesn't really understand all the data points, they might look at that and go, oh boy, the market must be collapsing. Yeah, well, not really. We're not too far off how many houses we sold this time last year. So from that standpoint, we're relatively the same. All right, just breaking down this chart, you can see right here, as I always show you, we now have a gauge of the absorption rate. So we've moved from a red hot seller's market where at one point we were actually at like 90% absorption rate, actually 100%. If you look at March and April here, that was a crazy time. We're now getting down into, like I said, balanced market territory. We're 51.02% of the listings sold. So if you look at this chart here, this is August was the slowest month for sales this year. Like I said, getting into normal market. And by the way, a very normal market would be around 35 to 40% absorption rate, which is right in that balanced market territory. Last month, that's 762,600. That's for a detached home, and that is up 9.4% year over year for a detached house in Calgary. So that is a new record for pricing. So even though sales are down, the prices are still up. And if we come down here, you can see that was 1,026 homes sold out of 2,011 listed, and on average 26 days on the market. So it's still pretty. And I love looking at this market distribution because you can see our sweet spot for Calgary is $600,000 to $700,000. Although that was 26.16%. And of course, as prices rise, as always, when you look at these charts, you can see that the $700,000 to $800,000 price range is now creeping up to be in a tie place. But just goes to show there's still some product, $500,000 to $600,000 in Calgary for a detached home. But most of it, especially for the first-time buyers wanting to get into a detached home, is that $600,000 to $700,000 price range. The thing that is just amazing to me, though, and I just can't believe what's happening, is that luxury market, $1 million to $1.5 million, 9.59% of the market. So that's quite a few properties, like 857 properties have sold. But even look at, over 2 million. 143 properties have sold over $2 million this year in the Calgary area. So it's a pretty healthy luxury market and a strong market. So, there doesn't really seem to be an end in sight. But like I said from the start of this video, this is a good thing, that we're seeing more inventory and we're getting into a more balanced market. By the way things are looking, I'll give you my prediction towards the end of the video in just a minute. But, we're seeing still a very healthy market in Calgary, and it doesn't look like that health is going to change. We're just not going to see this red hot market like we had, and that really is a good thing. All right, semi-detached, I'm going to go through this really fast. 50% of the market, not much has changed there. 681,000 is the benchmark price for this month, and that is also up 9.62%. So nearly not much different than the detached market. $500,000 to $600,000, no surprise there. It's always $100,000 less than the detached, so nothing has changed. Same picture here for the luxury semi-detached, $700,000 to $1.5 million. You've got a really, really healthy market there, and it just goes to show that more and more people are totally okay with living in semi-detached properties. It's becoming the norm. So row houses have finally slowed down. I say thankfully, because it was ridiculous. Take a look at like 100% absorption rate almost every month this year. We finally, as we hit June, things started to slow down a little bit. Now we've got a 58.18% absorption rate. It was just like you could not keep these townhouses on the market for more than a day earlier this year. So it's nice to see that slow down. We hit a benchmark price of $461,000. That's up 12.47% year over year. You can see 384 sold out of 660. So once again, a little bit more inventory, not as much demand. There's our price point, the sweet spot, $400,000 to $500,000, literally 40% of the market. This is where the vast majority of first-time buyers are looking, and no wonder. It's affordable. This type of product is the next best thing to buying a semi-detached. So the apartment condos also now have entered balanced market territory. Now they were in the seller's market there for a while too, and you can see it's dropped off considerably. We peaked back in March for the most sales, and now we've slowly dropped off. Now we're at a 40% absorption rate. It is very normal and healthy to be at about 25% when it comes to apartment condominiums. And it's pretty normal because when it comes to apartment condominiums, there's always a lot more supply because we've just built a lot more condominiums in Calgary. That's all. It's not a bad thing. It's just how it is. $346,000 is the benchmark price. That's up 15.81%. So you can see we don't want to see numbers like this climbing like 15% per year. That just starts pricing people out of the market. We need it to be a little bit more toned down than that. It'd be, really healthy to keep that around 4 to 5% if we could get there. 604 out of 1,476 have sold. So that's really strong and healthy. And you can see right there, 300 to 400,000 is 42% of the market. Okay, let me just wrap up this with my particular opinion of the forecast as to what's going to happen in September and going on to the end of the year. There is no question that these lower interest rates are going to help our market. There are people right now that have been waiting for lower interest rates to come. Some of these buyers are now going to qualify where just even last month they weren't able to, so that's good. I don't think we're going to see this crazy seller's market that we saw in the spring. I think that's over. I think this balanced market will now continue well into the fall and getting into months. What I do see for Calgary is that we still have a very strong economic environment. I'm well aware, looking over my shoulder, that there's an election coming in the U.S. this year. We never know. Election years, anything can happen when it comes to that as far as the U.S. goes. But when it comes to Alberta, we're always been a little bit of an island of our own. We can't, or I should say, we don't always follow the normal trends, obviously, of the rest of Canada or into the U.S., even though, the old saying, when the U.S. catches a cold, we feel it up here in Canada, which we do. And we're not a complete island of our own. But with oil prices remaining high, which is always good for energy in this province, we continue to have a migration into Alberta, not as robust as it was in 2022 and 2020. There still is a migration coming here. And the fact that we do have jobs and energy prices where there are, I think the outlook is that our market will remain stable. That's just my own personal prediction. I'm well aware of the fact that I could be wrong too, because sometimes something can come into a situation economically that globally that can affect everybody, like the financial crisis of 2008. There's been some things that nobody could have ever predicted. So there's always that that I look over my shoulder and well aware of. But beyond that, unless something catastrophic really happens globally, I just don't see that that we're going to see anything but a strong, healthy, balanced market moving forward. So I think for a buyer, you could take advantage of these lower interest rates moving forward. This may be a really good opportunity to get in. Maybe it's time to really talk about taking a variable rate, because apparently the way it's looking, we're going to see some more rate cuts as well. But my advice is start looking. I mean, I've had some people say, well, I'll just maybe wait a little longer for the interest rates to come down. Well, to me, you could potentially find a perfect property that checks all the boxes at a really decent price. And, that may not be available if you just wait for lower interest rates. So, you can be a little bit more fussy and take your time. But I mean, if the perfect property comes along, to me, this is a good opportunity to jump on it. And, if you're selling and moving up, hey, the market's a little more stable, so it's a good time to be able to get the price you're probably looking for, at least close to it, and you're going to have an opportunity to have more inventory to be able to look at, to make that move up into the right property as well. So this is why I like balanced markets. So as always, feel free to reach out to me with any questions. I'm the kind of person that always gives advice. I don't necessarily want anything for it. Sometimes people reach out to me and they're a year away before they're even thinking real estate. That's okay too. I just don't talk to people who are jumping into the real estate market at this very moment. But last but not least, we have a brand new program, and this is something you really should talk to me about. We partnered up with a flooring company, and I'm putting some skin in the game, because we find there's a lot of people that have properties that maybe your carpet is pretty worn and it needs to be replaced, and maybe the paint needs to be done. And we already know this. Carpet and paint gives the best returns for any seller. So sometimes people are not in a position to be able to fork out the cash to do all of that before they list their property. We have a new program where we will cover the upfront cost and we'll pick it up on the back end when the property sells. But to me, you can't go wrong. It's an investment. On average, if you put $15,000, say, with a flooring and paint in your house, chances are pretty high, depending on the property, you're going to make $5,000 to $15,000 in return. Plus, it's going to sell your house easier. So that is definitely worth a phone call to me on how that program works. But to me, you absolutely can't lose. We're just committed to, with all of the incentives and programs we have, just to make it easier and help you sell your house quickly for the most amount of money. That's really what we're all about. So please reach out with any of those questions, and I will be happy to help you. See you next month.